Hi there. Today we're going to do a short video on how to go over PFP1, the spreadsheet called your personal balance sheet. Now, some of the things we're going to talk about later on in the course or in future courses, but for now we're just going to go through the mechanics of how you can fill this out. When you download the file from Canvas, assuming it opens, you never know with Canvas, but assuming it opens, you'll get this. And you see in the tab down here, PFP1 balance sheet. I've designed it so that you only have to fill out the cells in yellow. So let's go ahead and do that. And I'm just going to make some numbers up, but I'm going to walk you through how to do it. So let's say, Eric S., when am I doing this? I'm doing it January 1st of 2022. Now, a balance sheet is a snapshot of your assets, your liabilities, that is your entire net worth, but it's just a snapshot at a specific period in time. So let's say we're going to do it 31 of December 2021. We're taking the snapshot then. Let's say we get our year-end statements then at the end of December, and then we go, okay, this is how much we are worth as of this date, December 31st, 2021. So here we go. So let's say you have a normal bank account with a checking account and a savings account. So let's say, okay, there's $2,372 in my checking account. What I like to do is label these and say checking at Schools First Credit Union. And then let's say I have a savings account at the same place. And let's say that has $77.52 in it. I'm just making these numbers up. Cash value of life insurance. This is if you have a whole life policy. Most people do not. So at least 90% of the time when someone puts a value in this cell here, cash value of life insurance, they're wrong. And whenever someone puts a value in, I usually comment on their assignment before I give them a final grade. I go, hey, are you sure about this? Check your life insurance. This is not the value that will be paid out upon your death. This is the value if you cancel your life insurance and get money back, some of the money back that you've paid into it. If you have what's known as a term life insurance policy, this will be zero. I have a term life policy, so I'm going to put 0 in here. That means if I stop paying my insurance or live past the end of the term, it's worth $0 to me and $0 to my heirs. If you have something else, some kind of money market funds or something like that, you can put that in here. Always please label these things, whatever you put it in. Something else. And we'll put 0 in there as well. Now this gray cell here, if we look, it sums up these 4. So it adds all of these, boom, 10,484. That's your total liquid assets as of this date. Now let's go to your household assets. What's your house worth? Forget whether or not you have a mortgage. We'll talk about that later. Let's say your house is worth $500,000. That means if you were to sell it, what would someone pay you for? What about cars? Well, I have 2 cars. I have a minivan. We'll say that's worth $20,000. And then I have an older Subaru. Let's say that's worth $12,000. Oops. Maybe I put an extra 0 in there. I don't have $250,000 worth of cars. Thank goodness. That's more like it. $37,000 worth of cars. Much more than I'd like, but whatever. Furniture. Do you have furniture that's worth anything? I'm looking around here. Thank goodness my camera isn't on, but the answer is no. I don't really have any furniture worth anything. I'm going to put that at 0. You might have a few dollars worth or 500 or 5,000 even. Just think, what would someone give you for it? I do not value these things at cost. If you spend $1,000 on a TV 5 years ago and it's not worth more than 50 bucks now, I would put $50 in. To be safe, I would put 0 in. Electronics, your iPhone, what did you spend on that? Okay, what is it worth now? What will someone give you for it now? For me, these kinds of things, I don't really have much. I have a phone. I'm trying to think. I have a computer that's 10 years old. I'm just going to leave those at 0. Actually, I'll leave them both at 0 because, you know, if I were broke and had to, you know, sell everything I owned or whatever, I'd get something for it, but realistically, not very much. Jewelry, I'll put $500 in here. I don't really wear rings or watches or anything like that. And if you have something else in there, maybe other appliances or something of value, you know, if it's over $500 or $1,000, you might want to throw that in there. So the household assets, this gray one, this sums up all of these, right? So, oops. So you enter what's in the yellow, and then it automatically sums up here in the gray. Now let's go down to investment assets, something like a 401k. What I like to do is list where it is. And then maybe if you have multiple accounts, you just put the last 3 or 4 digits of the account number. So let's say my 401k is at Schwab and it ends in 123, and that is worth, I don't know, $73,000. Now let's say I have a Roth IRA at E-Trade that ends in 456, and that is worth $27,000. And let's say I have what I like to call a cash brokerage account. So it's not a retirement account. So I earn money, I pay tax on the money, and then I just put the money into a trading account. We'll say some to, you know, invest in stocks or speculate on cryptocurrencies or whatever. So let's say that's at Robinhood, and it ends in 789, and I have $17,000 in there. I wish I purchased $17,000 of Bitcoin ages ago, but don't we all? Now you can put any other accounts. I have a futures account. We'll say that's A345, and let's say that has whatever $13,000 in, right? Just add all of those up. So pop all of those in, and again, all of these things you'll have a statement at month end, at year end. You just pop the numbers in there. Total investment assets. Well, again, just like before, it's the sum of all these yellow ones, 130,000. So what does that give us? We now have gone through our assets, and according to this, which is liquid assets plus household assets plus total investment assets, gives us total assets in this scenario, $678,000 almost. Okay, is that what we're worth? Yeah, not quite. Why is that? Well, let's see. Oh, do you have a credit card? So I'm going to change this. Amex ending in ER25, and that I owe $29.50 on. I have another credit card. Let's call it a Visa that ends in, I don't know, 123, and let's say I owe $37.50 on that one. Now, remember, I said I had 2 cars up here, one worth $25,000, one worth $12,000. Well, let's say that the $25,000 car, let's say I have a loan on that. Again, you will have statements on these. If you have a loan, if you have a credit card or whatever, they will be sending you a statement, and you will see how much you owe on those. So and then I didn't list anything else. If you have anything else, all you have to do is go in here, insert, and then Control C, Control V, and oops, I forgot about my MasterCard that ends in 456, and that has $1,300 on it. So you can go and add stuff in easily like that. And then if you do it in the middle, it will still sum it up and it will capture it. So according to this, current liabilities. Oh, you know what? Actually, I borrowed money from Mom. I forgot about that. I had to give Mom a birthday present, and so I had to borrow $1,000 from her. I mean, the birthday present I got her was only $100, but I borrowed $1,000 just because. So 29,000 now is the total of all of my current liabilities. Obviously, Mom's not giving me a statement at the end of the month. She's just nagging me, but that's what moms do. That's what they're for, right? So these you'll all have a statement. And again, the most common thing I see for people is not knowing this. Most people do not know how much debt they have. They don't know the interest rate, et cetera. I have other videos on that. We'll go over that later on. But for now, let's just find out. Boom, we're taking a snapshot, December 31st. This is all the money, current liabilities, shorter term liabilities is what that means. Now, back to the, remember, we had a house up here that is worth 500,000, not what it costs necessarily. It's worth 500,000 now. And let's say I just bought it. So my mortgage is 460,000. These are considered long-term liabilities, right? This is debt that is repaid over 10, 15, 30 years, something like that. So that long-term liability total is $460,000. Now we take all of that and the total long-term liabilities 460 plus the current liabilities is 29,000. That gives us 489,000. Then what happens is we have our net worth, and it's simple. All of your assets, all of the things that are worth money, 677,000 minus all of the money we owe. So think of it. If I turned everything I owned into cash, I sold my house, I sold my cars, I sold my iPhone, I liquidated my brokerage accounts, I liquidated, my retirement accounts, everything. I paid off all my debts. What would be left over? Well, 188,984. And that is what we call net worth. Now, what I would do in this scenario, because this is something that, remember, this is a snapshot as of this date and time, December 31st, 2021, my net worth was 188,984. And don't worry if yours is lower, that's okay. Some will be lower, some will be higher. I've seen it all in my volunteer and professorial work. So then what I'm going to do is make a copy, create a copy of this. And then this, I'm going to go balance sheet December 2021. And I'm just going to leave that there. And then next time I do this, maybe next quarter in March or in June, if you only want to do it twice a year, or maybe I'm only going to do it once a year. And I'll do, I'll change this to December 31st, 2022. And then I'll go and update all these numbers again. And maybe it will come out that this is higher or lower, but this way you can not only keep track of where you are, but you can keep track of where you have been and how this has progressed over time. Hopefully it's getting better. We will talk more about that when we're covering other topics in the course, but I hope this was helpful. Thank you very much.